Good morning, folks. How are you? So you're going to hear all kinds of sounds in the background. Just checking my audio here. All right. So uh, I hope everybody's doing well today. I can hear myself, so I'm not going to bother asking for you guys to let me know because I can hear the old man talking. As a reminder, as I mentioned, my wife is in the background. She's making homemade dog food as we make this live stream here. So if you hear something in the background, pots and pans, the food processor blending up the beef and turkey, that's what it is, and I'm not gonna apologize. Okay. So we're looking at the dollar index here, and I want to kind of quickly go through some market commentary before I sail off into Passion Week. All right. So here's the current lay of the land on dollar index. I mentioned how we were looking at this little volume imbalance as a potential issue. If we went below it, if we treat it as inversion pair value gap, that would be problematic and probably take us down into this area here. It was unable to provide that type of resistance, which is good because, like I said, I'm bullish on dollar and I'm bearish on euro dollar and pound dollar. So everything that you're seeing here actually helps that idea or that bias, if you will. I'm not sure if you guys can hear that. So anyway, the little volume imbalance there to there. Okay, so we have this suspension block because it has a volume imbalance at the top, volume imbalance at the low. You can see how we use that for the buy side delivery, and then discount sensitivity came in, started rallying. We have minor buy side here, and then once we get above that, should it happen? I could be wrong, right? Next order of business is this minor buy side up here. So let's annotate that so that way it'll be on my charts next time we come together. Come together. That's a great song, man. I'm dating myself. Sing it, ICT. Sing it, boy. All right, so we're looking at the man. We had fun yesterday, didn't we? We had like an all-day event on Trader Roundup. So the dollar index looks like we're gonna go higher, minor buy side, and then 101.97 looks like it's in the cards for upside objective should we continue. While we're inside of this range here, all of this business, watch this. This is the monthly, small little volume imbalance down there, and we have a buy side imbalance, sell side efficiency. That's what's being shaded here. And if you go back and look at the previous live streams, you'll understand what it is I was referring to and what that was based on. And it's going to cause difficulty, kind of like a high resistance liquidity run condition until we get through that. Let's go back down to a daily and let's roll on into euro dollar. Alrighty. Okay, so I mentioned these two SIBIs, and I mentioned that I'd like to see those pick up their premium sensitivity. In other words, start to be utilized as a means to send price lower and keep them from allowing price to go up. Okay. And I mentioned this tiny. Well, I shouldn't say tiny now. She never said that. The consequent encouragement right here to this point up here. Look where all the bodies were. And then we broke down below consequent encouragement. So while we're inside this range here, see that? While we're in that range, it's going to be banging around, but it kept it at bay. The wicks were allowed. Let's do it this way. Okay. And then just take this one off just for a second. So that way we're not going to have too many things there. I'm going to take that one on too. So inside that wick, which let me move over one candlestick so you can see it. So that wick right here, that wick right in here, price can stay inside that. And the bodies did, in fact, do that very thing. So as I mentioned, the wicks are going to be the dominant PD array if it's next to or just to the left of fair value gap. Okay. So we have fair value gap, and we have fair value gap. So we have two consecutive fair value gaps there, which are SIBIs. But we have this wick that's going to hold price. So it's a structure in which price is creating a boundary saying, sure, you can anticipate a little bit of a wick outside of it, but look where the body stayed. Isn't that interesting? You'll never find that logic in anything else. Kind of weird, isn't it? But we're looking for obviously a run below this here. I like the fact that this wick, the consequent encroachment, we saw the body close below that. Okay, I'm not going to draw that out here, but just know that this candlestick here on the 23rd for euro dollar, put a 50% level on your fib only and anchor it to the open of the candle down to the low. And you'll see that we close below consequent encroachment, which is indicative of a continuation. It just means it's much more probability that it's going to go in this direction lower. Now, we have a minor sell side liquidity pool here, minor sell side liquidity pool here, relative equal lows just above the target I've been calling for on euro dollar over here. Okay, so that's what we're looking for, and we'll see if we get that in next week's trading. It will be holiday volume, so just expect a little bit of weird price action. It can still deliver, obviously, but just be mindful. There's a lot of pockets that are not participating. Let's put it that way. Okay. And let's go over to GBPUSD, or cable as we refer to it. Okay. And you can see how price used our inversion fair value gap here. It used it here on Monday of the week, creating the high of the week. Then Tuesday, Wednesday, Thursday, Friday acceleration. You see that? So sticking to the idea that, with this potentially is a market maker sell model, original consolidation, return to consolidation, accumulation, first stage accumulation, second stage reaccumulation, smart money reversal, low risk sell, first stage distribution, second stage redistribution. This is where we should see the largest pronounced move lower. Right. And as long as we remain below this inversion fair value gap, I'm looking for that right here. Ready? And now let's go over to crude oil real quick. It's a beautiful day, by the way. I'm looking out my windows and it's like absolutely stunning. You know what that means? They're going to start spraying that garbage in the sky. It always happens now. With a beautiful blue sky, and they had to spray out that poison in the air. So we have this wick, and make that an annotation on your chart. So that's just the 50% level on the fib. That's just this one toggled. Okay. I got a question left in the comment section of yesterday's live stream. Why did I change my fib settings from a previous year's mentorship? Well, if you haven't noticed, I've been progressively teaching more things. And I've been teaching in the order that I created and authored these concepts. So all the time, if you would have been with me side by side since 1992, when I first started, moving forward, everything that I journaled, everything that I documented, everything that I developed, used, coined, created, discovered, all those things are being taught in the order that I got it. Okay, so it would go without saying, obviously, if I'm teaching in progression, you're going to increase in your understanding, and I'm revealing things that I didn't learn At the beginning, I learned over time. Okay, so that's why you're seeing things develop, right? So it's a progressive understanding and learning. So that's the 50% level. I want to see it kind of gap up, opening above that, because if it can do that, that would be interesting. And then leave that separation there, maybe come down to a little bit, not completely close it, and then rip higher. And if we can do that type of scenario, in other words, if we gap open on Sunday at 6 o'clock tomorrow, or yeah, tomorrow, Eastern time, if it could open above it, trade down a little bit, but leave the gap open and then rip higher and go above this high, man alive, that is extremely bullish. I'm not saying it has to do that, but that's something I would like to see because it would, in my opinion, really drive home the the severity and the fierceness, the veracity of how bullish this market can be. So that's what I'm looking for. It's not something that I'm telling you should be trading. I'm studying it. I'm watching it. It's wartime driven and extremely manipulated right now, and the risks are exorbitant. So just be mindful of that. Okay. All right. So let's take a quick look at Bitcoin. See how wrong I am. So we had our inversion fair value gap. The bodies respected it. Consequent encouragement couldn't even touch it. That's weakness. Broke below the short-term low here. We have sell side here, relative equal lows here with sell side, and then we have this. Now, before we take out that low, just be mindful that this little wick here, let's do it like this. It needs to overcome this because it could just trade right down to that and stay inside the range from this high and that consequent encouragement of that wick. So until we break through this on a closing basis, we're not certain that it's going to take that out. So just be mindful that that's where I could be wrong. Not in the grand scheme of things, because I think my target, and I'm being really optimistic here, my target down here, you know, that's where I'm willing to hold. I'm not holding any resistance or trades, but that's my opinion. And no, I'm not trolling. I absolutely believe it's going to go to zero. I had people commenting, sending me stuff saying, "Do you really think it's going to go to zero?" I absolutely 100% believe it's going to go to zero. I know you guys don't want to hear it. I know you guys don't want to believe it, and you think it's going to go to a million. It's not going to happen. So it doesn't matter. I'm talking to my wife right now. You've been doing it. I'm live streaming. They hear it. They hear it. They like it. Uh, I heard the recording. Well, I mean, you were running a couple of seconds ago, and I didn't hear it in the playback, but who knows? They could probably hear it better than I can. So anyway, I'll wait a second while she's doing that. It won't take a second to blend all that stuff up. The perils of live streaming with everything next to your kitchen. This guy's got such a huge ass house, and he's literally trying to do this next to the kitchen. Does that make any sense? I just like to do things my way. Okay. So anyway, lower prices on Bitcoin. I'd like to see it stay below this short-term high, personally. So above this high, kind of like nixes the idea. I might be wrong. Okay, but if it takes out this short-term high, I'm probably wrong, and it may need to go sideways a little bit longer, or maybe go higher for a little bit of time. But I just don't see it. I think people are waking up to this thing here and waking up to crypto as a Ponzi scheme. And eventually, this is going to be the last conspiracy theory proven truthful, that it's all garbage. It's not real money. Come at me, bro. I'm ready. So let's go over to what was the other markets? Gold. All right. So here we looked at gold. Next bit of business down here, because we already used this inefficiency with that low there. We have sell side here, and then we have sell side here. Admittedly, if we get down to this one, if we get below that, I don't know where gold's going to go. This would be my first half of the year objective for gold. Then I'm done. I would have to wait for new information to determine what my point of interest would be after it gets there. Okay, it's kind of like what we've done with the indices on the daily chart, where I told you my 6-month objective, the first 6 months of 2026. So since there was this big sell-off here that I got real lucky with, um, just gently recapping that little volume imbalance, I told you we would likely see that treat as a inversion. And we see that happening there. Don't be afraid when you're looking at volume imbalances like this. Don't be afraid to continuously use that same logic of inversion aspects. So what I mean by that is this right here, it gapped up and this candlestick's closed to the open here. So what is that indicating? It's showing technically if this was all one range of a candlestick, it would be like a buy side imbalance with an efficiency, but it's not. So it's a volume imbalance, but the gap opening was higher than the previous day's close. So generally, if we were above that and came back down and we're bullish, it could be used as a foothold to see prices going higher. But as I was warning back here, it would be uncivilized for you not to take profit. Okay. And you can see they hurried up and ran against all of you on that good news I gave you. But then eventually this volume imbalance, they came right back up into that and then gave up the ghost. We worked inside this, like I said, it can get a little muddy in here. But if we went below that and treat it as inversion fair value gap, which is what we did here, then it was off to the races. The speed at which this drop off was called in advance because of silver's tomfoolery. Okay, the shenanigans that's going on over in the silver market, because that's highly manipulated, and they're bailing out the good old boys because they had heavy net short positions and they had margin calls they did not answer. Okay, and this bailed them out. It's hard to beat this business when they're rigging it against every aspect of it, right? But there's no algorithm. We have the volume imbalance here after creating that rundown into inefficiencies here and clean up the sell side. We gapped up. The bodies are being dropped in here. And now it looks like this could be used to be like the last little bit or last kiss before dropping below this here and then reaching for this objective. And again, once we get here on gold, I'll have to take a look at what the market's showing at that time, and then I'll have an opinion then. But right now, this is all I'm looking for. And if it can get there, I'm done. Please don't beg me for gold stuff anymore. I did it because it was noteworthy. I told you gold was going to go up. We had all that big run up last year, and then I told you we're in trouble here. You take some profits, and then I told you if we use this as an inversion fair value gap, and here we were going to dump down. And if we were going to dump down, it's going to be quick, sudden, because of silver. Let's go over to silver real quick. Same bit of business here. We would expect it to sell off quickly, not letting them get out of the long positions without that stop right there being taken. We have inefficiency there, and we have some smooth lows there. This one can get a little bit over exaggerated on the downside. So while this is my target, 6 months target is here. So if we take out that low, again, I'm done with silver. I'm not interested in commenting on it again. It'll go back into the closet and wait for me to, have another event-driven issue with it. But for now, this is what I'm looking for. That, if we can get to these lows right here. So this is the initial target, 56.85. I'm wrong. If we get back above this volume imbalance, if it gets above this, it can treat that as a bullish PD array, and then it could go higher. But I just don't see that in the cards right now. All right, so high grade copper is one I'm watching also. I like those lows over there for the copper market. And now we can go into Dow. Oh, look at that. You know what? This is so frustrating. Every time I come out here and I tell you something about the market, it just happens to work, and I can't give these trolls any bullshit to talk about. Isn't it a shame? I'm being so hard on these guys. Twist it, Michael, twist it. Keep your boot on their throat. So here's the target we were looking for Dow, and We broke through that on Friday after using inversion aspect here with the volume imbalance. Beautifully done here, here, and then look at the nice sell-off. Are you getting the gist that there's a reoccurring pattern here? The signatures that I'm describing to you in price action before it happens, they tend to work, don't they? Yeah, yeah, it's pretty interesting. So this is done. I don't think it's done, but it's done its objective here. So we can run over into MES and take a look at that. Wow, look at that. So let's scroll back here. So here is my first half of the year, 6 months looking out, you know, that macro perspective, not macro in terms of time, like the 20-minute window, last 10 minutes of the hour, first 10 minutes of the hour. I'm not talking about that. When I say macro, I'm saying like the big picture, the higher time frame, long-term perspective. For me, that's 6 months. I try not to do more than that. And it's very difficult to hold those types of long-term perspectives in this current market climate because there's so much stuff going on. It's very hard to do that and also weigh out and choose my wording carefully because I know I have a lot of influence and I don't want to have people taking this advice and trying to apply it to real money trading instead of paper trading. Okay. Paper trading is what you should be doing. If you're listening to me, just paper trade. If you do it with real money, it is extremely uncomfortable for me when you show me your results, even when it's profitable. I understand why you're doing it, but what you're doing is the very thing I ask you not to do. Okay. So don't be offended if I ignore your post. It's not because I don't see you doing what you're doing. I'm not going to congratulate you because you're basically saying, "Yeah, I hear you, ICT, but I'm going to just do what I want to do and ignore what you said because it helps me have a clean conscience talking to you about the market. And if you like me doing these things, just help cultivate that atmosphere for me because I don't want to give commentary and have any kind of trepidation or any kind of reluctance because I know some of you are going to over leverage your account. I know some of you are not going to listen and you're going to push the envelope in terms of what you're willing to take on as risk because you're so under the water. You probably have lost all kinds of money doing these prop firms. You probably behind in debt, or you just want to get money real quick because you're greedy. And you see how good I am and accurate, and you think that that's a good lottery bet. And you're going to put all your money on these big price runs you think is going to happen. And I could get it wrong. I could get it wrong. And what would otherwise be a very small little paper cut, you turned it into a ruinous heap. So just again, please, it's not that I don't want to see you succeeding. I do, but you can word it differently. You don't have to show me the chart with the money that you made or your bounce. I don't need to see those things. The public doesn't need to see that either. If you say, I learned a lot from this, this helped me today, that is the best way you can communicate to me because that's not going to put fear into my analysis when I don't have fear otherwise. I don't want me saying something and then as I say it or before I say something, get this gnawing twist in my gut about, hey, you know, if I say this, there's probably going to be people taking this as a trade advice when it's not trade advice. So just just help me help you. Okay. There you go. Help me help you, and I will show you how to eventually. I ain't gonna finish it. You've seen Jerry Maguire. You know what the saying is, right? I think my wife's trying to run that food processor every time I say something now. Are you compete against me, woman? You better realize, you better recognize. You just see her looking at me. Dude, you're simping. It's whatever, bro. If you had a wife like mine, you'd be doing whatever shit asked you to do. I don't necessarily do that now. I had to wait till she put her earbuds in before I said that part. So we have sell side here. We have sell side here, and that's the near term bit of business. So we have that. I'm not going to annotate it so you guys know what that is, obviously. Sell side here, and then ultimately my 6 month target is down here. So last summer's lows. So far, we're stretching out nice. So some nice, stretched black limousines working off of. Let's see here. What do I got going on here? Why is that annotation there? Oh, old eyes, bro. Old eyes. Like the color messed me up. It's this portion of that move here. So volume and balance there, up to that wick. There's no volume and balance there. So I had the wrong color. So see how confusing it can be because I'm using a color scheme to try to teach you when I don't really use colors except for when I'm making a documentary about what the market may do based on this. And I'm trying to teach you because I know there's a big language barrier to a lot of folks that are watching me. So if I can get you to look at the color, you know that, it's if it's was created with a up move, for instance, like this is what it started as. And that's where the inversion aspect was. And I think what I did was the last time we were together, I just borrowed the range and I did this. So now it's this here. But this is just simply a bearish fair value gap. So the color scheme would look like that in the way I usually teach it. You can see that it colored outside the lines here a little bit, just an order block. And then we used these two candles here that couldn't even get to consequent encouragement. So is that bullish or bearish? Bearish. And then we have these nice price runs. Okay. So I had a couple questions about when price is doing these types of things here, where it leaves a range and when we see it trade back up into it and it can't even trade to consequent encouragement, we always allow for it to eventually try to get to it. But if it can't get there and touch it, maximize it a little bit like that. There you go. These candles are like magnums now, right? What do you know about magnums, ICT? So the inability to get to consequent encouragement on that candle and that one, okay, sets the tone for displacement sharply lower. Okay. If you go back and look at my old recordings where I've done executions and I'm trading with live accounts, by the way, the utilization of these concepts, you'll see it by me typing out here. I'm expecting or I want to see speed and distance and magnitude. I want to see it strong, large, down close candles. It's when I'm seeing things like this that I wasn't teaching you back then, but you'll see it in those trade executions. That's one of the best things you can do is go back and look at old executions, things I put up on Twitter, and I have usually like a song or something like that. They're sped up, but you can slow the videos down on the X. Like you can just go down to a slower thing and you can see it. But it's not a matter of watching it happen. It's just to look at where I'm annotating and why I'm expecting certain things. And it's these types of signatures and price action that I'm anticipating these, price runs. I'm expecting that big stretched out candle, the big long down closed candles to develop and be populated on the chart. So we have very close proximity to the next sell side. I'd like to see it open below that. So gap open below here. I think that would be cool. And then see if we can accelerate down into this next week. So that would be the bit of business for the first half of the year. And I would have done a pretty good job as a rookie sensation with, I'm going to wait. She's looking at me, smiling when she's running the food processor. I'm not sure if you guys can hear it or not, but if you can't, that's what I'm waiting for when I'm pausing now. If you can hear it, just endure it, okay? Don't complain to me. If you complain about it, I'm going to mute you. I'll never see your comment again. So, crybabies. Can you turn off the ads, ICT? They're killing us every 5 minutes. No, I'm not going to turn them off. Why? Because even if I turn them off, YouTube knows that they can make lots of money off of it, and they're going to run ads on my videos anyway. So stop bitching to me, okay? You're learning for fucking free. You don't like, get the fuck out of here. Wow, ICT, you're mean. No, I'm tired of people complaining about free shit. So go somewhere else. Go to your paid people and see if they're giving you this kind of commentary and analysis that's so fucking good. Come on, do that. I could be charging $6,500 fucking dollars, $10,000. How about that? $25,000. Guys, you're never happy. You're never satisfied. So anyway, we're looking for those objectives. It doesn't have to get down to this next week, but that's like I said, that's my long-term perspective, which is a 6-month perspective, and it was based on the first half of the year. Okay, so pretty pretty heavy in here, so I think it might continue. And now let's go M and Q. All right, and here is the objective I'm looking for Nasdaq. So if we get that, then I'll have to take a step back and say, okay, where are we at? What's in the chart at that time? It might continue lower still after that, but right now all I have is I'm looking for this and I'm going to stay with that narrative until I'm proven wrong. Okay. But near term, we have this. So that's the sell side. I think we could probably get that next week. And I'd like to see it really open below that. So if we get some kind of real crazy news, if the things heat up over the Middle East a little bit more, or maybe something happens in the United States, it's kind of like an oil refinery, blowing up, you know, blackouts going off. When I told you, they'll warn you a couple years ago to get stuff for when the power goes out. California's seeing that. You're going to see more of that. So if you haven't made your house ready doing that kind of stuff, you might want to do some of that instead of buying your next watch or your next car. Do things like that, because when there's no gas, your Lamborghini doesn't go anywhere. It doesn't matter how much money you got. If the pumps aren't pumping it, you're rumping it. You're going to get out on your bicycle. So here's the bit of business here on Nasdaq, and we're going to spend the rest of the video here, which won't be long. My wife will make sure of that. The the what is this level? What do I have that there for? Oh, consequent encroachment. So just be mindful of this wick here because it's slightly lower than this. So this could be a target on an intraday basis. It might hit that and cause like the market. And let's say it this way: if we don't gap below here, if we don't gap below here, and we open close or above this level, it could trade down to that consequent encroachment and then react off of that for a little bit of a retracement or pause. But I just see that as a minor speed bump. I don't see that really being an issue. And that's why I'd rather see it gap below this here, because then this only becomes a minor issue at all. So just had that on your chart. I included it so that way I didn't forget about it in the commentary. So I want to see it gap below here on Sunday. And then if we can, over the next trading sessions or a couple weeks or whatever, it could do it next week. It could go here and wrap it up. My whole first 6 months of targeting for major indices would be complete. And then I can retire and stop making videos, and you can all just say you were here and watched it, and that's it. That's it. I'll delete my YouTube channel, go and start selling used cars. Oh no, I'm being so naughty. I'm ornery today, aren't I? It's just I woke up on that side of the bed this morning. I'm feeling it. So, and I can't be on X. Usually I'm over there starting up, some shit over there, stirring the pot. But I promised my wife I wouldn't be over there. So, and remember, you didn't see me over there in that Twitter space yesterday. It never happened. It was a body double. So if you look at this candlestick right here, that open, see that right there, 23,914 even. Okay, that price is what I'm anchored to here. You'll see that when we drop down into the 1 minute chart. Okay, so we opened here, we traded up into it. That's the change in the state of delivery. And then we started seeing price go lower. Now we'll drop down into 1 minute chart. Okay. Alrighty then. Let's go back to the business here. If you noticed the title of this live stream, it should say first hour dealing range. Okay. So I'm going to teach you that today, and then we're going to get out of here because it looks too nice for me to be here talking to you about things in hindsight. Are you seeing hindsight here? Are you learning what's going to happen beforehand? Have you been hanging out with me for a couple weeks and starting to see how maybe the opinions of others are not all that accurate? Maybe. So we opened up here, and let's show the business of regular trading hours. Okay. So here is previous regular trading hours at 4:14. Look at the bottom of the chart. Okay. So that's Thursday, 4:14 p.m. That's Eastern time. Okay. So always when you're looking at price action, have your charts. I don't care where you live. Okay. You need to have your charts set to this time. And then you have to acclimate your trading and analysis based on this time. It doesn't matter where you're at. Okay. The markets operate on this time frame, this time zone. Everything is on Eastern time. Okay. You don't have to like it, but that's the way it is. So here is the close. And since we were down here at 9:30, there's no way that was going to close that gap, even if Trump would have put a Trump post out there saying that they cured everything and the fountain of youth is available for free. Bring your cups. That right there wouldn't have been filled even with that. So at 9:30, I could already know that this is going to be labeled as regular trading hours opening range gap high, which is what you see abbreviated over here, RTHORG high. Why is it the high? It's because it's above where we're going to open up at 9:30. At 9:30, we label that regular trading hours open range gap low because it's lower than 414's regular trading hours settlement price. Okay. So by adding a fib between these two price points, you'll get the 50% level here, which is consequent encroachment of the opening range gap. That is this. This here is the actual gap. If you hear me talking with a lisp a little bit, I was eating grapes yesterday, and I'm not supposed to have grapes, so I'm being punished for it. But I crunched down on the edge of the right side of my tongue, and oh man, it's terrible. It's absolutely terrible. But you know how I am, right? I can't shut up. The mentor with the mouth. This guy talks too much, man. So we have this sell side delivery with the opening price. Gap is shown here, and consequent encroachment always allow for the opportunity for the first. Give me a second. Always allow for the potential for price to try to, in the first 30 minutes between 9:31 and 10 o'clock in the morning Eastern time, always anticipate the likelihood, because there's a 70% likelihood that it's going to try to get to the midpoint of that opening range gap. So that's what we were watching yesterday during the live stream. And because it's Friday, it's TGIF, we sold off a little bit. And because of how we've been trading, I was a little bit reluctant to co-sign on a sell-off rate from the opening range gap at 9:30. So I'll take that off. So just know that's the business. And now we're going to go into regular trading. I'm sorry, electronic trading hours. And this candlestick is going to be our focus right there because that's the 9:30 candle. So we'll go into electronic trading hours. Now here's that point of reference there. We just have all this extra stuff in electronic trading hours, which is London session and previous Asian session. So we opened here. The gap never got traded to. It just opened and it was gap and go is what they call it. Okay, so it gapped lower. We had to retrace it back in the first percent of fair value gap, which is what I outlined before we even went up into it. But I told you I was a little reluctant into taking any shorts there because I want to see a little bit more detail, a little bit more evidence to suggest that we're likely to keep going lower. Now, if you didn't watch the live stream yesterday, after you watch this one, because we're going to be done in about 15 minutes, I promise you. But go watch yesterday's during the first hour of trading from 9:30 to 10:30. Okay, just watch that portion of the recording because you're going to hear me talk about very specific things. So what I'm going to teach today, you'll hear me say live in front of all of you that were watching it and were present in the live stream, just like you're going to see it here live taught for the very first time. So in the industry, if you're following all these influencers online, everybody has their own little thing, their little quirky little, I don't know, I guess it's like a concept that they trust or whatever. And they'll say they're trading the opening range breakout or orbs, okay? I've seen people use a supposed 5-minute opening range, 15-minute, 30-minute, and then today we're going to teach you what the algorithm refers to, which is the first hour's dealing range, okay? If you go back and listen to what I was talking about at the time, I was giving indications about how when this formed and we started dropping down, this right here, it could trade up into that. And then when we traded, it started getting heavy. I was wanting to see it, does it have any interest to get to that buy side? And you'll see that's truth. Okay, I wanted to see if it could get there. And then also, I had this one over here annotated. Okay, so there was buy side. This was inside of the opening range gap, which is above this opening price at 930, that candlestick at 930. Remember, the full gap is there. You can't see it up here because we're looking at electronic trading hours. But in regular trading hours, with it being toggled down here, that's the gap now. Okay. So it's real important you don't get kind of like this, disoriented. Make sure you're looking at the right chart and keeping the proper perspective. So you see it doesn't exist like this because there's all of this price action overnight. See that? So by having this, hush, babe, try to keep them quiet. I don't want to have to keep correcting them. Oh, he calls his wife babe. We work it out in advance. It's just it's cosplay. So the SIBI here, it started to send price lower, and I was mentioning how it could go below here, but what I wanted to see was, and you'll see this in the recording, I wanted to see it trade below this with a little bit more than just dipping its toe in the water. And the same thing down here. Okay. I wanted to see the first hour's range. And if we look at it like this, here's 930 and then 1030. We'll go to 1030 in time. So all I'm doing is moving this around until I see 10:30 a.m. at the bottom of the chart. There you go. So now all I'm going to do is just snap it down to the lowest low. Okay. So there's your first hour's range. It's not the opening range, which is 30 minutes, but this is the first hour's range or first hour's dealing range. How is this useful? How does it benefit us? How do I use it? Well, when we were trading down here, okay, my concern was that eventually we're going to create some kind of a low, which is what I wanted to see. And at 10 o'clock, we had the market have its first 30 minutes. That's this. That's opening range. Okay. The first 30 minutes is opening range. I don't care what anybody tells you about a 15-minute order block. I'm not order block, opening range, or a 5-minute or a 10-minute. I could care less. Everybody's entitled to have their own interpretation, and that's fine. I'm not beating any of that up. Okay. What I'm trying to teach you is if you don't see it like this, you're going to miss some details that are helpful to you. Okay. And you determine if anything helpful to you in that regard. So we're going to go back to 10:30, which is your first hour's dealing range. First is this fair value gap, trades up to it, runs a short-term low, trades down, creates a low. Now, first 30 minutes is done. Opening range is done. So now we're going to watch and see what this does. It starts to retrace a little bit. I mentioned this here as a potential inversion fair value gap. And I talked about this becoming a potential inversion fair value gap, okay, or at least drawing up to this one. We saw it meander around in here, finally came up in here, and then traded up into midpoint. Notice where this is forming. So this 10 o'clock high, why am I calling it that? Here's 10 o'clock. After 10 o'clock, what high forms? This. This is the high that the lunch macro will target. If we're down below it and we are entering 10:30 to 11:30, in that vicinity? Because it can be a little bit early. Okay, I saw a person leave a comment. Um, you said that lunch is 11:30 to 1:30. Yes, but because things are so skewed, it can happen a little bit earlier. It can happen a little bit earlier. The bleed over from London close. Remember, there's traders participating in all of these markets, and they're closely correlated. So if London's closing up shop around 10 to 11 o'clock our local time and Eastern time, just be mindful that that could create the low of the day or the high of the day. And that influence over price action will be visible inside of the creation of the daily range. Long story short said, when we're looking for a lunch macro retracement target or objectives, we're going to be looking for from 10 o'clock, you would have it like this. Okay. Over here, we're at 1046. So the criteria is there, 1030 to 1130, that little sweet spot. Okay. It can start the lunch macro. I talked about this in the live stream. Okay. I mean, again, if you're just watching this and you didn't sit in the live stream as I was talking about these things, it's going to feel like I'm just form fitting it. And I encourage you to go hold the fire to the feet of ICT. You'll hear me say these things live. But I was talking about how it could be a macro price run using this gap, and I said that if we can get below, let me move this out of the way. If we can trade below here, like we were doing here, as soon as that candlestick closed right there below that midpoint of this wick, once I did, once we saw that, I said before it did it, this is in many ways a confirmation if you're going to trade the PM session. And I said I won't be coming back for the PM session, but this tells you, okay, this tells you that the day is going to continue going lower. You can anticipate lower prices in the afternoon. Don't just say, oh, he said it right here, it's good enough. Go back and watch what I said yesterday during the live stream. The point I'm teaching is I was telling you that this wick here, if we trade below that on a closing basis, dropping down, as we were making a run just shallow below that low here, and that's all we saw right there. Okay, remember the analogy I talked about a little chihuahua and like this, all this price action is like a big porch, and the chihuahua runs off the deck or the porch. Give me 1 second. It would meet something to scare it back on the porch, go back inside the range. Okay. And it did that very thing here. So I was telling you to watch this little gap and see if it can use it. And it didn't quite touch it there, right there on that candlestick. This one here, the low. So that's strength. It rallied up. We were watching it pull back a little bit, rallied up again. And right here on this candlestick, it failed to go to that 10 o'clock high as I was calling it live. And I told you that was manipulation. That was good old Phil. Okay. I talked about at the time of this candlestick's forming beforehand, I told you that we would probably run below. And if I'm wrong, it'll just keep going lower. But because of the first hour's range, which is what this is, look at the time at the bottom of the chart. There's 10 o'clock. Did I just move it wrong? Hang on 1 second. There you go. First hour's range low is right there. What have we done since the opening? Right here. We gapped lower, never traded into the gap at all. Came all the way down, created a low at 10 o'clock, a little bit of retracement. What's this? That's the halfway point or equilibrium of first hour's dealing range. That also qualifies the macro, lunch macro, run to that for a trade. It sells off. The bodies are respecting this gap over here. So this is reclaimed bearish fair value gap there. And then sends us down into that little shallow run below this. And I said all these things live, walked you through it before it actually happened. So for the people just watching this as a recording, or if you're watching it live right now and thinking to yourself, this has already happened. Anybody can do this. No, go into the live stream and watch what I did yesterday, and then you do that. I'll watch your live streams if you can do that. Okay. So sell side below here. I said live, it's going to probably just go below a little bit and come right back into the range. We don't want to see that if it's going to continuously go lower. If it can do these things, what things? Now here is the if then clause that's algorithmic. Go back with this logic I'm going to talk to you about right here. Go back to what I was saying about all these things here, and you'll see how it's plug and play logic. And then try to tell me there's no algorithm, okay? Because either I'm absolutely screwball loose in the head, insanely crazy intelligent, or a time traveler, or it's really rigged and I know how it works. Okay, that's all I'm saying. That's all I'm saying. The decision's yours. But this low, if we have that low taken out here, it'll be shallow. Why would I expect it to be a shallow run below this low and come back into the range? Because this low here forms, and we went into 1031. What's established now? The first hour's range. Now, I am not a breakout trader. I am not a support broken, chase it, go short, or a resistance broken, chase it, go long. I don't like those ideas. I think it's stupid to do that kind of stuff because you don't really know what you're doing. And one could argue and say, no, it's really simple and I can make money with it. Yeah, I can make money flipping a quarter too. Okay. But I'm not going to risk money. I'm not going to risk fortunes on flipping a coin or what the stars are saying, what the horoscope says. I'm not doing that stuff. Okay. I'm not doing it. You can do whatever you want. People go to casinos and they do all kinds of stuff. They think they're going to win because of the gout flared up. Okay. They got athlete's foot on the left foot, not the right foot. That means it's lucky. So this low being taken out here on a shallow basis is because we have already established the first hour's dealing range. And it's been one-sided right from the opening bell, lower. Okay. So now who's making money? Shorts. This drop down here, as I mentioned, that's going to entice people to do what? Chase it on a breakout. Well, it's been going down all morning. It broke support, so it's probably going to keep going lower. What we're doing is we're flipping retail logic upside down and attacking them with it. That's all we're doing. This is how you find wonderful turtle soup setups. Okay? This is the logic behind it. Because we had to close here below that consequent correction, that wick, any retracement here sets the stage and tone for the afternoon sell-off. Why would they want to come back and take out this high here? Because stop loss would have been trailed on shorts just above this high. It's also halfway point or equilibrium of the first hour's dealing range. Just looking at it like this, my eyeball was suggesting this has got to be real close to the halfway point. I didn't need to draw a line on top of it, okay? Just looking at it. And it also fits the criteria. I tell you that the algorithm will refer back to 10 o'clock. What's the high that forms after 10 o'clock? That's this one. When price was down here, it would likely draw up to here. This was manipulation. They stopped it dead in your tracks because you all were doing what I told you not to do. You're following me and you're putting your limit orders there. So Phil came in, turned the market around, and took you right into your stop loss if you were trading it. I said, this is where I would like to see it support price. If it can't do it, then I would be personally done. I killed the stream the very next minute. Phil took it right back up to there. But there's nobody watching me, right? There's nobody watching me. I got 2 million people, okay? 2 million people and so many ghosting watching my stream. You can't trust those numbers, okay? Trust me, there's more people. When I go and I do Twitter Spaces, do you know that the United Nations listens to it? You don't believe me? Look at the audience members. How about that? How about that? But there's no algorithm, right? Old old ICT's got the nations of the world listening to him. Because when I talk, these ticks react. These prices, they react. Why? Because I know what they're going to do. Not because I say something, but because I know what they're going to do. I told you on this candlestick as it formed live, that right there is what we're looking for. That is the false run. And now we can look for it to get into this here and then go for that liquidity there. That's the lunch macro, and you'll see it happening in the live stream. Here, when I tell you that's manipulation, that's fill, it pulls back and goes right back into consequent encroachment of that wick. Look where the bodies are. See that? Starts to rally, and in one candlestick, look at the low to high. In 1 minute. 1 minute. About 100 handles in 1 minute. Is that normal? Goes right to the top of that imbalance, which is this candlestick's low. Look at this candlestick's low. See that? 868 even, okay? 868 even, the high of this candlestick. Oh, I'm off by a tick. Okay, that's still good. It didn't go beyond it. It's inside that range. That's good. Then they use it here. Where's my, is there a missing candle there? Look at that. 829. I'm sorry, I'm 829. What am I talking about? 1129, 1130 should be and there isn't one. That's weird. Let me know on X if you're missing your 1130 candle because I don't have one on mine. That's wild. But anyway, they took it all the way up and just fell short of first percent to fair value gap. Is that bullish or bearish? If it turns on a dime and stops and goes lower, is that bullish or bearish? The way I teach order flow, that is bearish. You don't have to look inside candles. You don't have to look at how many people bought or sold around a particular, price level. And then we want to see how this range here get used because it's a sell side imbalance, buy side inefficiency here. While we're above it, it can act as inversion. But if it's resuming going lower, and it's going to do that because we saw price trade below it here on a closing basis, that sets the stage for the afternoon, the PM session, post 1 o'clock Eastern time. Watch what happens, okay? It uses the low of this to send it up there, falls short of the first percent of fair value gap, breaks down below this gap, this one here, which is a SIBI. So this has to go into reclaimed bearish fair gap. Tongue twister. Reclaimed bearish fair value gap. Okay. We trade through it, come back up, a little bit outside the lines here, but that's okay. Why is this not problematic for me? What do you see here? A wick and a wick. Wicks are like what? They're like gaps. Okay. We have this consequent encroachment, and we'll look at the full range from there to there. Look where the bodies are in the lower half. If it's bearish, the wicks can color outside the lines. That's you're gonna have to get comfortable with that. Okay, it's not a deal breaker, but for you, brand new, you want everything to be perfect. And in this market right now, I'm not getting as perfect as it usually can be. So you got to be a little bit more forgiving, be flexible with it. So it's supporting the idea that these wicks in here were in the lower half of it, even though we had a little bit of a wick here on the upside. The bodies are staying in the lower half of it. Order flow is bearish. The market drops down. Look when we go outside of it. The bodies enter back into this gap over here, this one. If it's bearish, do we want to see the bodies in the upper half or the lower half? We want to see the bodies being buried in the lower half. The wicks can come up here, but they can't drop bodies there. All of them have to be here. So the market sells off, trades back down into the other order block, or not order block, fair value gap that I mentioned in the live stream yesterday. We trade through it to the downside. We close below it right there. Now, what's going to happen? This is going to become a reclaimed bearish fair value gap. So it would look like this if we were just drawing them out. So that way the color scheme is consistent the way I teach you. Trade through it, comes back up. Look where the body stops. What's it telling you? Is order flow bearish or bullish? Where's sell side? Here, here, here. What time of day is it? We're getting close towards the afternoon PM session. Market trades one more time to consequent encroachment, drops lower, clears up sell side here, trades down into this wick, consequent encroachment. Watch. This is what you're supposed to be doing when you're back testing and recording your observations, studying these types of things. Girls, hey, come. So this consequent encroachment of that wick here, we trade down into that and we leave the low there and come right back up into this gap. The sell side imbalance buy side inefficiency becomes, again, one more time, reclaimed bearish fair value gap. And the sell side here and here is formed. And one more time, they wick it through. This is a stop run. As soon as it did this, that right there, it's over. The rest of the session, they knocked out anybody that's trailed stop losses on shorts from here to here to here to here. That was a run on that liquidity. As soon as that candlestick closed like that, you have every reason to anticipate lower prices. This, at that time, becomes an inversion fair value gap. We were doing trader roundup discussions all during this time. All right, so the close on that candlestick, come on now. Close comes in at 494 quarter, open 49. Okay, so there's no volume imbalance there, so we got to drop it down to the wick there. Close 77 3/4, open 78. So there is that volume imbalance. So I have that good. All right, and then this here becomes inversion fair value gap. Give me a thumbs up if you want me to do a week-long series of how you should backtest and log as a beginner. That way you can use it as a foundation. After I come back from my break over the next week, I can come back and do short little videos. I'll speed up the annotations, that way I'm not boring you, but I'll type it out so that we can see what I have and the things that I use when I have my notes, like my notepad, the information that I'm putting in it, and I'm writing down. I'll show you what it is I'm doing, because I'm not going to show you the stuff that I have in my notes, because it's, like I said, it's personal stuff. I have also reminders at certain times of the day, check on this, check on that. And none of you guys are entitled to that kind of stuff, okay? And I'm not going to go out of my way to break my routine just so I can show you my stuff. I don't have to show you my stuff, and just be content with that. Just because I'm online, I'm an online figure, doesn't make you, or obligate me rather, to show you everything in my personal life. It doesn't work like that. But when we ran up here and did this and we closed here, look what the bodies did. The bodies tell you the story, the narrative. The wicks do the damage. So they kept the body closed below this bearish fair value gap here. So this is why, again, this is not supply and demand. There ain't a motherfucker walking this planet that's going to come back and say, look at this right here. This is a supply and demand zone. Not when it's trading right there. No, that's not happening. They're not looking at that. Okay. That's a stale level to them. There ain't nothing stale. Okay. ICT's bread never goes stale. So, but I toast everybody else's bread. Here's the run on liquidity. The bodies are below that fair value gap. So that reclaimed bearish fair value gap that I showed you yesterday in the live stream. Okay. We're running buy side. We're running through it, clearing it. And then as soon as we close below it, what are we seeing here? The bodies have shown you confirmation that this was just a stop hunt. Look for the next PD array as a premium array that you can short on. Rally up, drop down. Rally up, stop hunt. This one, because we trade to a PD array, and look at the bodies here. Okay. Because this run didn't even go to consequent encroachment and it dropped down, all that was a run on rejection. Okay, that up close candlestick, that closing price, that's rejection block. Go look at month 4 of the 2016 private mentorship students playlist. And this, okay, rejection block. I didn't do that right. What am I doing here? Come on now. Get that off here. I wanted it to look like this. I'm hitting Control M on my keyboard, and what that does is it puts a little flag for me. If I was recording it, I would have to go back and edit this and then do this part over again. So it would look like I just did it the first time, and it wasn't right actually. So rejection. Wow. All right, and then we'll just do it in the middle. So there's rejection block. It runs up, hits it, clears the rejection block, and then sells off. When it does that, it doesn't need to take out that high because it's anchored to the basis of that fair value gap here. This one over here that I gave you yesterday in the live stream. So the logic is they ran it back up to take the bodies out. Remember, the bodies tell you the narrative. The wicks are allowed to do the damage. I don't need the wicks to clear. Okay, I don't need that. But it's selling off here, and it did it right before this big pump up. So the first premium array I can sell short on is this buy sign about sell sign efficiency. Carrying it through the range, it's going to act as inversion fair value gap here. So anything in here getting short is okay. Now, apply what I've been teaching you recently. Same logic now. The fair value gap right before a stop hunt that you clearly can see. Buy side, rallies. What's the fair value gap right before that? This one. My deuce, my deuce, my deuce. Runs up. The bodies are telling you what? Lower half, consequent encroachment, no passy, no passy. Where's it going to go? Sell side. Take the low out of the day and then continuously drop. First gap after blowing through it, that's the one you want to trade. You don't want to expect it to go back up into this one. So many people, ICT mentors, this is the one I would be interested in because you're a fucking clown. You have no idea what you're talking about. I never taught that. I never fucking said that. Okay. But you guys want to come out here and pretend you know something. And you're literally leading people astray. And you're using my name while doing it. So come on now. Stop. First fair value gap right there. Boom. Now, here's for your notes. In a trending day, how do we know it's going to be a trending day, ICT? Because I told you back in the live stream, okay, if we can close below this wick that was inside of the first hour's dealing range, if we can trade on a closing base below that, that sets the stage for lower prices in the afternoon, in the PM session. I won't be here during the PM session. Go back and watch the live stream. It's there. Choke on it. Here we have the run below that low. So we'll take this off. So that sell side there. It runs through it. In a trending day, after we have broken first hour's dealing range, this is not breaking it. This is them testing it and then retracing back in that I told you was likely to happen before it happened. As that candle was forming, before it even closed, I told you that was it. Just like I told you, this high was manipulation. Okay. First presented fair value gap after first hour's dealing range is broken. First presented fair value gap after that, that's the one when you'll sell on. Right there. Watch, kids. Watch. You better call your mother. You better call your mother. All right, let's see. We'll start with the wick to wick first. I have to make sure I verify the close. 35 3/4. Open. 35 half. So this one's lower than this candlestick's close. So we have a volume imbalance. So you have to include that. Okay. I had someone also ask me, how am I making that pop up? One of the students actually said that I can do this, and I learned from their suggestion here in that regard. Hover over top of the candlestick that you want to see, and then with your mouse, left button click and hold down on it, and then it'll show you the details. And again, trading view, I know you're watching. Add the date on this little table. That way it helps because when we move around, you can see the values are changing. But I would really like to make sure that it shows up because I can take screenshots with these type of information, and it'd be very helpful to me. Even though it shows the time and the date at the bottom, I know some of you are like, well, that's redundant. Work with the old man, please. Just please. So that it trades up into it here. Can't even trade to the consequent encroachment. Is that bullish or bearish? While order flow is bearish, this is a signature that tells you it can't even get to halfway point. If you can't even meet me halfway, why bother, bro? See how that works? So it can't even get to halfway. It's exceedingly weak. It's going to go the other direction. Okay. And it trades lower, 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 lower. Now let's talk about what we can do with that first. I know I said it was going to be 15 minutes, right? You guys keep falling for that shit all the time. Oh man, you guys keep falling for it. It's going to be a short video. Damn, this guy keeps talking, man. All right. And you love it. Don't act like you don't love it because you do. You absolutely love it. You want me to do more of it. All right. So there's a problem if I ever stop having content to be able to teach you because then, you know, then there's nothing to learn from the old man, right? But I have so much stuff. As long as the Lord keeps giving me breath and my mental faculties are here, man, we have a long way to go. There's so many things you can learn. So here's the first hour's dealing range, as the title should be showing in the description portion. So first hour's dealing range. Now we can take, watch this low, okay? Watch this. There's a couple ways you can do it. You can do this, drag it down to that little dotted line, lays right on the low, like that. And that'll give you a projection of where price may go, okay? Now, let me ask you a question. When I was talking in I believe it was the first Trader Roundup podcast that was after my live stream yesterday. If I'm not mistaken, if I'm incorrect, I apologize, but I know I said it yesterday, at least in one of them. But I want to believe it was the first one. I talked about how, um, or maybe it was my live stream. It may have been my live stream, but I was talking about how, oh, it was definitely my live stream because I was referring to how I used the setup in the Nasdaq or the micro Nasdaq, and I went short during the Wednesday live stream. I said at the closing portions of that, I said, okay, it's going to go lower. Just study this, and I used relative equal lows, and I didn't use the lower low because of the climate that we're in. It's not likely to break the range. Okay. So if we know that that's likely to happen, and like say this is the perfect scenario, this is two ranges. It's the first hour's range and then the projection of that down. Okay. So this is like a standard deviation of the range established in the first hour, then projected lower. All right. Think like how I teach flout and the Asian range projections, all those types of things that I taught in the 2017 portion of the paid mentorship lectures that's on my YouTube for free. Stop paying for it. These people are rooking you. I give it to you for free. You're out here looking for something you can pay for. You want to spend money? Send some money to St. Jude. Okay, there you go. That's how you can do it. That's a charity that I believe in. That's a charity I actually give money to. And then go watch my videos for free. If you want to spend money, there you go. And you're actually contributing to a good cause. So what happens if, okay, what happens if this is the perfect scenario? You anticipate this as the low that could happen if it's perfect, right? Did it get there? Mm-mm. Nope. Didn't happen. Does it mean it's flawed? No. But here's what you can do. You can take this range and say, okay, I want to be trading with the highest degree of probability, but in the same direction. And you think this is the range that it could trade down to. Okay, what I'm doing is I'm anchoring to the visual low of that rectangle. Okay. Now, because I have that on, I can do this. I'm going to borrow the 75 level. So 75% of the range that could be delivered if it's a 100% run, which would be a full breakdown below these lows to get down here, which is one full replication or standard deviation of the first hour's dealing range. If it can get that far, that's a perfect world. But are we trading in perfect market conditions and climate right now? Absolutely not. It's a whole lot of tomfoolery. So what you could do as a suggestion, when you know that you're likely in a scenario where it could probably be unfulfilled for the day that you're trading, it could get there, but you don't want to hold on to overnight risk. You don't want to hold on to over weekend risk where Sunday's gap opening could be actually against you. By placing the 75, okay, we'll do 25 here. So 25 would be the lower portion because I drew the fib from the high down to low. So there's your lower quarter, okay? So this portion here, anywhere in here is an ideal area to take a close and be content. Or as soon as we get into this, be aggressive about trailing your stop loss, okay? So what that does is it helps you manage any open position and not allow it to come back and take a lion's portion of the run away from you. Okay. So, like for instance, when we had this drop down in here, rallied up, look where the bodies are stopping. I'm going to show you something in a minute how all this is reacting using the information based on the first hour's dealing range. Just let me see this boring part first. But when it starts to drop off here, you can then trail your stop loss here. And as it breaks lower, 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 you're going to trail your stop loss all through here. Every single time it creates a little short-term swing low or every 3 candles. Every 3 candles. Every time it makes a new set of 3 candles, trail the stop loss down. You don't need swing highs when you do that. 1, 2, 3. Okay. Your stop loss would be above the last 3 candles high. And then when it creates another 3 candles, 1, 2, 3. Okay. When it breaks lower, your stop loss would be dropped down just above this high. Just keep a running range that's dynamic on a 1-minute chart or whatever time frame you're using. And what that does is it allows you to strangle the unrealized profit. And then if you get stopped out, you're done. Just walk away. And that would happen where you get stopped out. It would be somewhere in this area here, probably on that candlestick, or if not that one. So you wouldn't have got out at the exact low because you're trying to get to this low as a perfect scenario, but you're getting stopped out in the direction of the run continuously moving, but not giving back the majority of the run. Okay. Sometimes when you see me trading and you'll see me do partials after there's been a short-term little turn, and it's not me getting stopped out. I'm just doing a partial, and it looks like I'm taking a partial on an up-close candle. I'm using the logic of watching that rule I just gave you, which is 3 candles, the highest high in those last 3 candles. That's where your stop loss would be. You're not doing that in every trade. You're doing that when there's a condition like this where the probabilities of it, jerking and changing gears and going against you real quick and not getting to your target, it helps you frame a logic of trailing the stop loss tight and being okay and happy if it stops you out and not worrying about it. Otherwise, you would leave your stop loss up here and let it try to go to it. But it's not in those kind of conditions right now. We have a lot of tomfoolery, a lot of unrealized ranges or targets because there's a failure to launch trying to get to these objectives because it's very difficult market conditions. All right, so let's make this a little bit more fun. Let's take that off, that off, and first hour's range here to there. And we'll drag it down so it's laying over top of it like that. So what I did was I laid that 50% level right there at that low. Now I'm going to go into the fib settings. I'm going to add all of the octants. Watch what happens. Okay. So here is the first hour's dealing range. Okay. And that low is the low of it. That's that little false break below it. And then back into the range we went. Look at the retracement here. It can get to the first percent of fair value gap, but it can get to the upper octant. Oh, wow. Right. Find that and like off, motherfuckers. It ain't there. So it drops down. We use the high of this candlestick here. It's using this quadrant, upper quadrant there. Sells off, works around in here, works around in here, back into the gap. Manipulation. So when we see things run that's not laying on top of an octant or quadrant level, because that's the basis of a key level. If you're seeing things happen in price action and it runs where it doesn't make sense and it's not on or trading to an octant or a quadrant level, it's manipulation. That's what this is. That's what this is. Okay. Here we're using the middle of that little wick there, consequent encroachment here, back to the midpoint level, uses it perfectly there on that candle. Let me show you. See how that candlestick's high right here is riding along this level? See it? Isn't that pretty? That's pretty, isn't it? See how that gap stays there and didn't get worked at all? Why? Because it's the break through it, first presented after that on a trending day. That's the one you want to trade. That's the one you want to dogpile in on. We trade down to this octant, move lower to the next quadrant, lower 0.25%, back up to octant, trade down, work around that lower quadrant. Look at the bodies. Look at the bodies. What are they doing? What is this? What kind of artifact is that? This right here, this is proof. Proof unequivocally. This is absolute proof. There is no algorithm, bro. Look at this. The body's staying right there on that lower quadrant, on a range that didn't exist yet. Remember, these levels, as soon as you get the first hour's dealing range, you can project these levels and then watch how the day uses them. That's the stuff I write down on my notepad. As soon as I get the first hour's range, I'm writing that down. I'm seeing, okay, this is the level I'm anticipating. I'm looking at time and price. I'm looking at time and price. Looking at time, then price. Okay. So using this logic and then not getting down to the lowest low, couldn't get to it here, but we're in the last few minutes of trading. Using these types of things help me forecast. They help me weigh the strength or the weakness of a price run that I may be a part of or anticipating. And if I'm calling out levels, if I'm tweeting something like watch this level, watch that level, many times they are in agreement with these types of things and liquidity. So if there's a pool of liquidity that lines up with one of these levels using the first hour's dealing range. And again, don't if you have something that works, don't say, "Oh, I have to have this, or I'm not going to be satisfied." If you have something already taught that's working, that's wonderful. Just include this as a side study, just to collect some data doing it. And I think it's an interesting thing to observe and let your own experience using it determine whether or not there's any value to you blending it with your analysis. That's all I'm suggesting to you here. Okay. But the first hour's dealing range is very, very beneficial when you know what you're looking for. I.e., an example, how I was outlining this very thing here before it happened. And I told you because we closed below this wicks, consequent encroachment, that sets the stage for lower prices in the PM session. That's what I told you in the live stream. That is not ambiguous. I told you I wasn't interested in doing here because I wanted to see what it does for the afternoon. And I gave the criteria that tells me that the afternoon was going to be bearish before the afternoon started. Okay? Again, bending time and space. Anyway, I hope you learned something today. I hope you have a very, very pleasant weekend. I had a lot of fun yesterday. Got a little spicy yesterday with a couple things, but I like that kind of stuff. I like it because I like correcting people. I like making sure that they have the truth. And the people that are out there talking all kinds of dumb shit about me, making up stuff because they want clout, they want traffic to their little videos or their bullshit. Okay. All that stuff falls apart if you just hang out here and you'll see me do this stuff and I'll make history right in front of you. I will tell you the future before it happens for free. There's no obligation to be here. You have nothing that's held over top of you. You better pay me. You better keep paying me, or I'm not going to teach you. No, I love teaching. I absolutely love it. And if you love what you see being taught and you like to be an encouragement to me, all you got to do is click that little thumbs up. It doesn't make me any more money. It just tells me that, hey, I was here, I saw this, I appreciate what you're doing, and I would like to see more of it. Okay. And if you didn't like it, tell me on X what was bad about it. Maybe I might use it as a suggestion, as a way of improving teaching. I'm not afraid of constructive criticism. I'm just allergic to bullshit.